Ladies and gentlemen, good day and welcome to ITD Cementation India Limited Q3 FY22 post-results conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anshuman Ashish from ICICI Securities Limited. Thank you and over to you, sir.
Thank you, Lizanne. Ladies and gentlemen, good day and welcome to the Q3 FY22 post-results conference call of ITD Cementation India Limited. Today we are pleased to host the senior management of the company represented by Mr. Jayanta Basu, Managing Director, and Mr. Prasad Patwardhan, CFO. The call will begin with a brief introduction by the company, after which we'll open the floor for the Q&A session. Thank you, sir. I now hand over the call to Mr. Patwardhan for his opening remarks. Thank you and over to you, sir.
Thank you, Anshuman. Good afternoon, everyone, and thank you for joining us on our Q3 22 earnings call. This quarter, I will brief you on the financial performance of the company and then I will hand over to our MD, Mr. Basu, for his initial comments on the operating performance. In the quarter ending December 21, we have had a very robust top-line growth amid very challenging market conditions. The company is on track to achieve the 15 to 20% top-line growth that we had indicated at the beginning of the year. The real good news during this quarter and after the end of the quarter is on the new orders that we have secured. In the month of January, we have secured new orders of nearly 5,000 crores. And including these orders, our order book today stands at nearly, or it is beyond 15,000 crores. Now coming to the operational performance in the quarter ending December 21, on a consolidated basis for the quarter, we have reported total operating income of nearly 1,000 crores, which is an increase of about 26% on a Y-on-Y basis. The EBITDA is at about 87 crores and EBITDA margin is about 8.7%. PAT for the quarter is 20 crores. Overall, for the 9 months ending December 21, we have reported top line of 2,630 crores, which is a 50% increase on a year-on-year basis. EBITDA margin is at 245 crores and margins have come in at about 9.3%. We have seen a little bit of impact on our EBITDA margins, largely on account of the increased commodity prices that we have seen. PAT for the 9-month period is at 53 crores as against a loss of 37 crores last year. So overall, we have a pretty satisfactory performance in the quarter. I will now hand over to Mr. Basu for his initial comments and then we'll take your questions.
Thank you, Prasad, and good evening to all. Thanks for joining this Concall. I'd like to brief you about the operating performance for Q3 of this ITD Cementation India Limited. As Prasad has indicated, the progress during third quarter have been good and we have achieved almost 1,000 crore of revenue in this third quarter. And if you see the YTD revenue is around 2,600 crores in 9 months, which is almost equal to last year's entire revenue. As Prasad has also mentioned that our EBITDA and profit margin has been little bit less compared to last quarter. The reason behind this is that one is commodity price, which is known to everybody. The steel price, which was 3 months back 50 rupees, has gone up to 65,000 rupees. So there is an impact on that. Secondly, that extended monsoon in southern India. Many of our jobs we are doing in southern part of India, like marine jobs in Udangudi, Pamban, and metro jobs in Bangalore Metro, Vizhinjam Port. So there is some impact of extended monsoon in South India, which has impacted our performance a bit. And third, which I have touched last time as well, many of the jobs we have just started, and the list is quite long. As you can see that Dream City Surat Metro, Sikkim University at Gangtok, LNG terminal at for IOC, Aerospace Museum at New Delhi, then one job in Seabird Karwar for infrastructure development, marine job in Seabird Karwar. And because of our policy, we are still not able to declare the margin as the threshold limit of 10% hasn't been achieved. So I think all these things will unleash in next quarter and probably marginally better. Not probably, marginally definitely better in next quarter. Coming to the prospect, I think our work in hand is quite healthy. It was 11,000 crore last quarter, now it is almost 17,000 crores, which is a record in our history of our company. And so far, in this year, we have secured more than 7,500 crore of work in 9 months' time. And there are several other jobs in pipeline. Some of them will definitely convert it to order. As we have mentioned last time, even now also I maintain the same tempo that 20,000 crores of jobs are in pipeline. We hope that some of them will be converted to orders. The future is good, and with the job in hand we have, we should do better in next quarter and coming days in next year. With this, I will also like to touch, as usual, some projects which are key projects to us as far as progress is concerned. Mumbai Metro, we have already achieved around 86% of progress. Hopefully by end of this year, job will be completed. Kolkata Metro almost done, 96% progress. Bangalore Metro, the new underground job we have just started, but already have achieved 20% progress. Urangudi around 55%. Seabird marine job at Karwar just started, around 6% progress we have achieved. Trichy and Pune Airport around 50% to 30%, 38% progress. And one information I like to share here that Myanmar job, one of the overseas job which we are doing, there is some reduction in the scope of work. So I think by April or May the job will be completed. There is some reduction of scope by the client because of their business reason. I think that's all from my side as far as operating brief is concerned. Now we are welcome to address any questions. We'll be happy to address them. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit from DAM Capital. Please go ahead.
Yeah. Good afternoon, sir, and congratulations on a decent set of numbers. So my first question is, what is the average life of the order book, and what is the kind of growth possible in the FY23 and FY23 based on the the timelines?
Yeah, on an average, I think it is around 3 to 3.5 years for the large projects. And growth, definitely with the order book, we can expect a growth of around 20% plus in coming years, coming quarters.
And so can you expect the EBITDA margin to move back to a lower double digit? We've been struggling with single digit for a very long time. Can you expect it to move based on the order book and the knowledge we have of the inflation? Can you expect it to move back to 11% in FY?
Yeah, it will go to double digit maybe from second quarter of next year. As I have explained that all the companies are suffering because of commodity price. There is a genuine impact of that. Though last time I have mentioned that part of them has been covered by escalation, but now it is still, it is going upward. There is no downward trend. So that has impacted. If you see the material price of any contract is around more than 50%. But we hope that new contract where we have taken care of cognizance of this inflation of material price will not be impacted. So next year it will be better.
Given the fact that we have a large order book, do we have an appetite to keep taking orders for the next for the Q4 and FY22, or you want to wait for some time? And can you just please elaborate on the ordering opportunity outlook for the next fiscal?
Well, we will keep on pursuing the niche area of marine and some underground job. The good thing is that the government has realized that to ease the contractors' liability on non-funding facility, most of the bank guarantees, the performance bank guarantees, they have reduced to 3%. So that is one good thing. So I think the niche area, airport, marine, and of course underground metro will keep on pursuing. And in the pipeline, if you see, for marine we have got BMCT port, that is JNPT port, BMCT job, 3 tenders we have just submitted last week. And Gujarat, GCPTCL, I have mentioned last time, we are discussing with the client. It's going on for a long time. I hope something will be finalized by next month. That is a job from Tata Chemicals in Mithapur, and of course Colombo port from Adani at Sri Lanka also under discussion. In terms of underground metro, we have got Kanpur metro and Agra metro, which we have lost today to AFCONS. But there are several other jobs in Calcutta metro, Chennai metro, and in road sector, Ganga Expressway from Adani also under our radar. So likewise, there are good jobs in pipeline, and we will keep on pursuing them.
Well, just to add further, some of our larger projects will get completed or will be nearing completion in the next year or so. Projects like Bangalore Metro, underground metro in Calcutta and in Mumbai. So that will free up a lot of resources which we can deploy on the newer projects that we have won or we will bid for in future.
And is there a reason for us to going back to the road sector?
Well, the main reason of road sector why we are not interested, because most of the time we found that the right of sales are not available. Number one. Number two, the terms and conditions by National Highway, directly working with them, also not sometimes, favorable. But this is a job which will be from Adani group. They have secured this contract, 3 contracts in EP, and they want us to be part of their journey. And our relationship with this group is quite good. So we take a chance, and most important is a totally greenfield new road. So the right of access are available. So that is why we will be interested to participate in this job.
Understood, sir. Thank you and best of luck, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good evening, sir. Thanks for taking my question, and congrats on great execution and order inflow also in the month of January. So my question was just to basically understand, right now we've won almost 4,800 crores of orders in January, and the order book at almost 16,000 crores provides a very good revenue visibility. You listed out opportunities that we are chasing right now, but with this kind of an order book, do you think we would be more selective in taking orders and only go for orders which are, of course, which basically are overall generally our threshold rate and all? So, do you think a change in strategy, or do you think we'll probably continue with the same strategy as we were doing before?
No, strategy is a function of situation. So if we have now around 17,000 crore of order, naturally our strategy will vary accordingly. But as I just mentioned, that the area of marine and underground metro and some other market projects which we feel will definitely be pursued by us. and if we can see that capex are getting released from previous project and the job value is big, we'll definitely pursue, but we will be little bit selective, quite natural.
Got it, sir. Got it. And sir, in terms of, you mentioned that basically the raw material cost is also impacting the margins. Would you be able to give a broad breakup as to how much of our order book will have fixed price contracts in which we have to bear the entire raw material cost?
Most of the, not most, all the government projects what we have secured right now, like Chennai Metro, Indian Oil Corporation at Ennore, their escalation clauses are available, so it is protected. But private jobs like at airport at Ahmedabad or some job from Adani in marine sector, there we have to build up the escalation cost in our price. So I would say around 60% government job, 40 which is covered by escalation clause, 40% is not covered where we have to take the cost in our bid price.
Okay. Sir, if I remember correctly, sir, our order book breakup is that we have only 10% private. Around 45% each is from government or public sector undertakings. So if 40% of the order book is exposed to fixed price contracts, then apart from 10% private, would the remaining 30% be equally divided between government and PSU, or is it more PSU than government?
Yeah, it is a mix of PSU and government. But I like to say that whether PSU or government or private, there are two criteria. One is that escalation is payable as per the formula, so that takes care of the escalated cost. Second is whenever it is fixed price contract, there is a criteria. Sometimes we try to follow with the client that we work on a basis of star price. That we say that our bid is based on the cement per metric ton is this much, the enforcement per metric ton is this much. If there is an additional price because of that, we pay back. If it's a negative price, they pay back to us. So it is like that. And if it is a fixed price contract, definitely we have to assess during bidding stage what would be the likely escalation we may face, which we build in our bid price itself.
In bid price.
Yeah.
Right. Got it. And as you mentioned that we are looking to basically explore the possibility of working with the Adani Group on the Ganga Expressway. Now that's a huge project for 5,000 to 6,000 crores kind of a project. Would that also be a kind of a fixed price contract, or would there be a different treatment in that, given that we are venturing into the road segment after a long period of time?
No, definitely that will not be fixed price contract. We have our star price model in that our price today is based on the enforcement price this much, cement this much, material, so it is like that. So whatever actual price increase will be compensated by the client.
Okay, so you're saying it will not be a fixed price contract?
It's not fixed price contract, but not escalation formula contract. It's a star price contract.
Got it, sir. Sir, I just missed out on a couple of numbers that you had mentioned. If you can please repeat them again. I just wanted what percentage of work has been done on Kolkata and Bangalore Metro, and when do we expect them to be completed?
Kolkata Metro, 96% plus work has been completed. I think it will be another 8 to 9 months time when the entire work will be completed. As you know that tunneling has been done long time back, and we are in the process of retrieving or this TBM which was affected there. But finishing work takes time, as because we have got electromechanical and various other interface activities, depends upon various vendors. But part of the metro will run, I think, by another 1 or 2 months time from a place called Savbhumi to Salt Lake. So that is already under plan. Balance work by another 8 to 9 months time will be completed. And when I say Bangalore Metro, you are asking about elevated one or underground one?
Also both.
The elevated metro, as we have told last time, out of 4 contracts, 3 we have already completed, and we got the extension of time till date we have done the work, so that is done. Only one project is still going on, which may go up to end of this year.
End of the financial year?
Yeah, 2022.
Okay, by March 2022 we should be able to do it.
No, not March. Calendar year 22.
Oh, calendar year. Sure, sir. Got it. And Bangalore Underground, sir?
Underground has just started, but still, we have achieved good progress. Financial progress is around 20% so far, and this will go up to the end of 2024, December 2024.
Got it, sir. Got it. Great, sir. Thank you so much for taking my questions, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hi, sir. Congratulations on a decent number in this quarter. So our first question is, if I go back little in the history, so we used to do execution of about 3,000 crore on an order book of 6,000 crore. So now we are at 17,000 crores and we add some more orders. So do you think that we are already at 1,000 crore run rate from this quarter? So do you think that we can do that 8,000 crores execution on this order book?
You are so demanding every time.
Yeah, I'm just going by the order book.
Right. You are right, absolutely right. And that revenue has to increase next year. And we have to do our total budget and we have to come back to the number exactly. But yes, definitely it will be more next year.
Because 20% guidance looks to me a little on the lower side. So I was looking more at like we should be averaging at about 1,500 crores quarter should be the new base of execution for the current order book. So this is broadly I was thinking in the numbers.
Yeah, here there are a little technical issue. If you see out of the order book, we have got 6,000 crore order from underground metro, 4,000 crore in Chennai and 2,000 crore, almost 2,000 crore in Bangalore metro. Though Bangalore has started, but Chennai will take some time. As you know, the tunneling activity, which is my portion of TBM, will take at least another 1 year to start. The genuine revenue starts when TBM starts working. So that factor is there. If it is not 1,500 crore per quarter, it will be close to that. It has to be close to.
So about 12 to 1,300 is what at least we can see should be the run rate going ahead.
I don't know. It should be close to around that number. We'll work it out.
Okay, sir, sure. The second question is, you said that I think this week you have submitted that BMCT project, and so how big is this project? And if you can highlight how many bidders have, because I think this is a very highly specialized job. Even when we had got it long back, there were only 2-3 players who were technically qualified. So we give some sense on how many numbers of bidders have submitted their bids and what is the total order size?
Total order size comprising 3 package would be close to 4,500 crores.
Okay.
And this is not the end because there will be one more package which will be close to 1,000 crore, which is coming now. And the bidders, yes, all the bidders are there like Afcons, ourselves, local bidders, but not for the all packages. There is a work package, that is the building of the jetty and work. I hope that there will be only 3 bidders are there. 4 bidders are there. That is Afcons, L&T, ourselves, and NCC, a newcomer in this field. But the other packages where it is material supply and ground improvement, there are some other local bidders as well.
Okay, you said NCC is also bidding. Nagarjuna Construction is also there.
Yeah, Nagarjuna also.
Okay. So good, sir. Good to hear that. So my other question is on margins. So now we know that we have on the employee cost side, so we have been having under absorption of overheads, given the growth was not there, and now things are getting more normalized. So I see a significant room of improvement in margins. Maybe, as you said, double digit. This seems to be a likely possibility from second quarter of next financial year. But do you think it can go between like 10 to 15%, somewhere close to about 12%, because we will get huge operating leverage once this growth kicks up, which you mentioned earlier, 1,300 to 1,400 crores in that range if you do quarterly execution. So can we move closer to about like 12-13% kind of margin, or is it more like between 10 to 12?
Well, again, margin also is a function of when the job starts. The large chunk of job is TBM related job, where the threshold limit of 10% to achieve that will take some time. That is why the effect of Chennai Metro 2 jobs will not come very soon. Otherwise, yes, margin should be better than this year. At least double digit or slightly more than double digit we should expect.
Okay. And just lastly, any conclusion in that accident we had, the aquifer thing? So any settlement or any claims agreed with the insurance company, any potential liability which may come, because I think the fourth quarter we'll again do some CTC related measurements on cost to completion. So do you think any negative surprises can spring up in the fourth quarter, or it's largely behind, and we are on path to recovery?
I'll answer your last question first. We don't expect any hit on our CTC because of that issue, because whatever expenses we have to incur already have incurred and booked. There is no surprise, further surprise in this, because it has been done and taken care a long time back. So coming back to insurance, yes, they have certified certain amount from third party, the amount I think, Prasad. So we are working with the insurance company, but definitely they have certified some amount, and it will be paid to us very soon. That is only for the third party. Car policy is still waiting. We are working with the insurance company. Let us see how it goes. It's going well, but let us see what is the timeline.
Okay. But so largely on the entire order book which is right now, so do you think any more negative surprise can come in terms of CTC provisioning, further CTC provisioning requirement, or it's largely like we have everything provided and no negative surprises may sprung up in the fourth quarter?
See, as you know very well that CC26 and Bangalore Metro has affected us during last several quarters. So those things are now almost behind us. And the new job what we have secured, we are very conscious about that. We had robust tender analysis, and so I don't think there will be any surprise available now.
Great, sir. Great to hear that. And just one last thing for Prasad. So Prasad, this claim thing, I know we are still settling it out, but do you think that there's a potential reversal in any provision which you may have earlier done it, which may add to the overall profitability, if any claims come to us?
Well, we have had some success on, a few of the receivables that we had written off in earlier years. So in fact, we have seen some realization coming through in this financial year. We have entered into some sort of settlement agreements with a few of our customers where the dues were not coming through or were written off in earlier years. So we are pursuing these matters, and we are hoping that we'll see larger realizations in the next financial year.
Okay. Because I think your Mumbai project is also coming to a closure, and there could be potential reversals of this liquidity provisioning of LDs, which we keep. So is it right to assume that maybe next year will be much better once these reversals happen, since these projects are coming to a closure? And we typically being very conservative, keep some buffer out there. So next year from the margin perspective could be really good for us.
Well, we have been releasing the margins on some of these projects. While I won't speak about any one particular project, but generally you are right. We will see some release of margins as the project nears completion, and we should see that impact in the next year.
But in this quarter, the margins were lower to 8%, but there was nothing related to any write-offs or any provisioning on any particular project, right? This was normal course of business.
There's been no write-off, nothing in this quarter.
Okay, Prasad. Thank you, sir, Jayanta and Prasad. Thanks for answering my question. That's all from my side.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good evening, sir. Thank you for taking my question. So I just want to understand the ordering flow guidance. The ordering flow has been good so far. So what kind of additional ordering flow we can expect in next 1 now, and probably the guidance for the next year?
Jiten, let us first digest this order book. We had given a guidance of 5,000 crores. We have already received orders of 7,500 crores. But now you are asking us about the order inflow in the next year.
But at least we are, as you said, that we are expecting a good run rate in terms of top line. So probably we are getting exhausted with other metro projects. So we shall be looking to add, because Chennai Metro is the single largest project we have, but then there are other projects in the geography is getting over by next 6 months to 8 months. That was the only thought in terms of how we can see revenue accretion entering FY24. Anyways, so probably we can expect a run rate of 5 to 7,000 crore next year also, hopefully.
Yeah, I think Prasad has answered your question, but still I can say that maybe another 1,500 to 2,000 crore order we may expect in this quarter to the end of this month.
And sir, on the like we have seen profit from JVs falling down this quarter. I understand it could be because of revenue booking threshold or some reversal of cost. So this kind of volatility will remain going forward. How should we see this JV profits like?
Well, there will be some element of volatility in the JV in some of the margins that we declare, especially on these metro projects. When we have completed some part of work, which is where we thought that we might be exposed to some larger amount of risk, where we would have kept some provisions, and once that event is behind us, we would have released the margins. So that is what you would have seen in the September quarter, where there was a little bit of a bump as far as the margins from the JVs were concerned. And you are not seeing that in this quarter. So, it is event-based, and it is likely to happen whenever some such event occurs and we overcome it.
Okay. So basically, next quarter also we don't know, like it's something based on the completion stage. We can see that way.
That's correct.
Sir, on the bookkeeping front, I would need some numbers, mobilization advance outstanding, unbilled revenue, retention money, debtors, creditors, inventory, and if I would have missed on cash bank and gross debt numbers.
Well, gross debt is 550 crores. Net debt is about 350 crores. Mobilization advances are about 480 crores.
480, okay.
I don't have the other figures with me right now. Maybe we can share that with you offline.
Okay. And sir, just one last question. The bids which we have won recently and the bids which we are targeting to bid. So we know the competition intensity is really high, but there are a few niche projects which you are able to win, like the marine projects which you have won for 900 crore. So what kind of margin do we carry in such projects, and what kind of opportunity we see in this segment going forward, sir?
Yeah, marine projects opportunities are limited, but we are lucky to have most of them, and you can say margin of around slightly more than double digit at site level. And underground metro also we have secured 3 jobs, Bangalore and Chennai, 2 Chennai jobs. So further job not much except one Calcutta metro and Bangalore metro. And there also we are able to do better compared to other segments. So around 10 to 12% margin you can expect in such jobs.
And so on the subcontracting work which you're planning to take from Adani, so the competition also is very high for that particular project from various other regional players. But so then how are we placed, like in terms of our experience, the margin capability, the capex? So what new capex we'll have to do, something which can, if you have a better margin, but with capex net level, probably the earnings could come down from that particular project. So how are you planning to bid for that project?
Well, the level what we have reached today, if you see the capex is mostly required in underground metro, where 1 TBM will cost you around 50-60 crores. Like that, you have to have 4-5 TBMs, trench cutter, etc. Compared to that, even the job value of Adani will be 6,000 crores, 7,000 crore plus, but the capex requirement will not be that much compared to the revenue. So that is within manageable limit. And as far as competition is concerned, yes, competition is there. We put our price. If we get the job, we'll get the job at our price, not others' price.
So that is a fast track job, so 2-year project or 3-year kind?
As far as Adani is concerned, it is 2 years job, but definitely it will go slightly more than that.
So one last question, if I can squeeze. Prasad sir, what is the capex done so far and likely in Q4 and next year, sir?
Capex, what we have done so far is about 65 crores.
And any additional capex in Q4?
Well, may not be in Q4, but next year there will certainly be capex, because for these underground Chennai metro that we have got, we'll have to invest in acquisition of tunnel boring machines and trench cutters and some other equipment. So that
How
CapEx
many new TBM we can go for Chennai?
Sorry?
From the existing. How many new will go for? Because from Mumbai Metro will be transferring it to Bangalore to Chennai. So how many new TBMs we need at Chennai Metro?
We need one new TBM, but there is some other equipment that we may need to purchase. Of course, it may not be as the pricing may not be that much as compared to a TBM, but there will be some other capex that we'll have to incur.
So 100 crore capex we can see next year probably.
Yeah, easily, maybe a little more than that as well.
More also.
Yeah.
Okay, so that's it from my side. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Amish Chandrana from Tata Capital Financial Services Limited. Please go ahead. Amish, your line is unmuted. Please go ahead. Amish, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Pritesh Vora from Mission Holdings. Please go ahead.
Sir, what are the opportunity apart from tunnel boring, apart from tunnel making, what are the major areas we are present as far as order book concerned?
Okay, you are talking about order book. Apart from the Chennai Metro where we have got tunneling to be done, we have a marine job that is at Ennore, which is close to 900 crores. We just secured from Indian Oil Corporation. Thereafter, we have got one construction of university in Gangtok, that is Sikkim, close to 400 crores. We have also secured Ahmedabad Airport from Adani, 300 crore one job, another 172 crores. So these are the jobs we have just recently secured.
In terms of percentage of revenue, other than the tunneling job for metro and all that, what percentage of revenue other job will be contributing?
You see, I think marine and tunnel job put together contributes around 60% of the revenue. And so remaining job like airport, building, specialized job and elevated metro and road will be contributing 35 to 40%.
Okay. Sir, why, is operating margin, are you not passing steel and cement price hike in your contract, and are you taking more of a fixed price contract? Because at this level of 1,000 crore revenue, most of the contractor build in the escalation for the steel and cement going into the project. So can you elaborate on that? What made you to take the contract on a fixed price basis?
Yeah, I think you are absolutely right. Now, the contract what we are executing now, the revenue what we are getting now, those are all old contract, which we might have secured 1 year or 1.5 years back. And some of them are fixed contracts, some of them are with the escalation formula. But even escalation formula or fixed contract, the amount of price hike has happened recently during last 6-7 months. None of the formula is also working. Because you can expect a price hike of 10%, 15%, 20%. But if you see the steel price has gone from 45,000 to 65,000, which is something beyond an imagination. But when we are bidding now, recently, last 3 months, we have taken care of all these escalation prices of the steel and also going forward the new job will not have any problem. That is what is the situation now.
Right. And sir, metro, what are the projects in the pipeline and whom do you generally compete with in the metro job? Who would you see on the bid? Is it L&T, Afcons, or there are other people also?
Metro, L&T, Afcons, J. Kumar, Gulermark from Turkey, Tata Projects. So they are the main competitor in metro. Talking about underground metro. And pipeline, there is not many left out now. Delhi Metro, there are 2-3 contracts left out. Chennai Metro, maybe 1, or Bangalore Metro, I don't think anything is left out.
All right, sir. Wish you all the best, sir. Thank you.
Thank you.
Thank you. The next question is on the line of Amish Chandrana from Tata Capital Financial Services Limited. Please go ahead.
Yeah. Firstly, congratulations, sir, for the good results. So my question to you is, sir, out of your total works, what is the quantum of the works you give for subcontract and what is the quantum of the work you take it in your own books? Because more you give works on subcontract may impact on your margin. Thank you, sir.
Well, in our model of working, once upon a time, 100% work we used to do on our own. But there are certain jobs like road, if you do, or certain artwork related work, or where you have got electromechanical activities involved, you have to go for subcontracting. So today, I will not be able to tell the exact number, but I guess around 10 to 12% job we give for subcontract.
Okay, sir. Okay. And this percentage will remain the same going forward, considering the new works which you have undertaken, or it will increase by some percentage?
Our bottom line has been impacted because of additional steel price. Hopefully, going forward, it will be better than what we had.
Okay, sir. Thank you, sir. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Mohit from DAM Capital. Please go ahead.
Yes, so thanks for the opportunity once again. Sir, are there any other large opportunities for railways for tunneling which is coming up in the next fiscal year? I think we have one, right, where we last year we won Sikkim one. Is there anything else on the radar?
I mean, not in radar, but there are a lot of prospects in this segment because there is an emphasis by the government of India to lay railway line across the Himalayan range, many places, to go to the border. So, in Rishikesh area, in Himachal Pradesh, there are a lot of new railway lines through the tunnel will happen. But we don't have much appetite in this segment, to be very frank, because we have enough job now. We'll have to handle them, complete them, then only we'll try for such job.
Understood, sir. So how many TBMs you own at this point of time, and do we need to have more TBMs for taking all these underground contracts, or there is no need, or there's little need for extra TBMs?
Well, the job we secured from Chennai Metro, we require around 4 TBMs. We have 3 TBMs from existing Mumbai Metro job, which will go there. We may have to buy one new. So unless we have some more new underground job, we don't require any TBM to be purchased at this stage.
So we should not expect a major capex for in FY23 and FY24 for executing these large contracts.
No, this TBM were in Chennai Metro, 1 TBM, but apart from that, there are another machine called trench cutter, which is exclusively required by Chennai Metro. Those are very costly also. So there will be some capex, as Prasad just mentioned. We have to spend in next year.
Understood, sir. Thank you and all the best. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you, sir, for the opportunity. And sir, sorry for harping on this. But sir, with the kind of order book that we have in hand and with our execution capabilities, can we expect to reach a top line of 5,000 crores by FY24? And once we reach that, with the escalation clauses and the commodity price pass-through which we have incorporated in our newly won projects, can we see a margin of around 12-13% by that year, by FY24?
Very definite question. Top line, what you have mentioned, I hope that we'll be able to achieve. Margin, yes, but always in civil engineering construction there are uncertainties involved. but it will be double digit. I think we can expect slightly more than double digit going forward.
Okay, sir. And sir, we'll require a higher working capital limit and bank limits for executing these orders. So can you please tell us what the limits are currently and what are we seeking for in the next few years, in FY23 and 24?
Today we have fund-based limits, fund plus non-fund-based limits of about 4,000 plus crores. And we are already in discussion with our banks for further increase in the limits given the new orders that we have received. So we are pretty hopeful that our banks will come to our support and sanction the enhanced limits at the earliest.
So what will be that particular limit that you will be seeking for?
Well, I won't be able to comment. No, as I said, I won't be able to comment on that. We are in discussion with our banks for an increase in our limits, and hopefully that should come through in the next few months. So I don't see any challenge in, getting bank limits to support the projects that we are winning.
Okay. Sir, another question is on the high-speed rail opportunities which are about to come up. So the ministry has started preparing the DPRs for the rest of the projects. There are several projects which are under consideration. So, sir, any view on the size of the projects which may come up for bids and whether we will be participating in those projects given the order book that we have in hand and our execution capabilities?
Well, as far as the Ahmedabad-Mumbai high-speed rail, I think there are few tenders yet to come. One of them will be the tunnel in this area in BKC to Thane, which will be around 15,000 crores. Apart from that, most of the job will be at top layer, there is track laying. I will not be able to comment on that, what will be the value. Rest, any high-speed rail elsewhere, that is too early to say about that. But we will definitely keep our eyes open, and if there is a good opportunity, we will try to pursue.
Okay. But sir, going forward, are we building our capabilities more towards metros and high-speed rails versus the rest of the areas? Is it so?
Well, our capability in underground metro is already established, and that is being demonstrated also through Calcutta Metro, Mumbai Metro, before that Delhi Metro, now Chennai Metro, Bangalore Metro. So, yes, we rely upon our capability in underground metro. And high-speed rail is a specialized job if you come to the track laying. Otherwise, it is a simple job. It's a matter of volume. So we have to see how we can go ahead with that, how our appetite on that. Because last bid 2-3 tender in high-speed rail was very competitive. L&T has taken in a cutthroat price. We won't be able to compete to that level.
So could you give us the margins at which those projects were awarded? Will it be possible?
See, you are in a competitive market. So, as you know, construction industry margin, how much? Close to double digit, around double digit.
Okay. Thank you so much, sir, for answering my questions.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to the management for the closing comments.
Thank you, Anshuman, for hosting our call, and I would like to thank all the investors for their continued interest and support to our company. Look forward to interacting with you again next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.